Hey everyone, in this video I'm going to share with you one growth stock that's down 56% off its high that I think is an excellent buying opportunity on the dip. So first I'm going to look at some of its financial metrics, and then at the end of the video I will reveal what this growth stock is. So stay tuned, you're not going to want to miss it. Let's get right into it, starting with the company's revenue growth over the last several years. A few things to note here. Number one, as you can see by this huge dip here in 2020, that this company was devastated by the pandemic. It has many services that relies on bringing together large groups of people, which was not a good business to be in during the pandemic because people were trying to stay away from each other because they were afraid of the potentially deadly virus. Now, as economies have reopened, as people have gotten vaccinated, as they feel more comfortable being out and around people, this company has been rebounding strongly. Look at the revenue quarterly from a bottom of 12 billion up to 21.82 billion in its most recent quarter. I fully expect this to continue rising higher as consumers are absolutely unleashing pent-up demand for away from home experiences, and this company arguably offers some of the best away from home experiences you can find around the world. So great prospects going forward. The company was hurt, was devastated by the pandemic, but now it's got excellent prospects over the next several quarters. Similarly, if I show you its operating profit margin over the trailing 12 months, what you'll notice is a nice steady climb upward, reaching above 20% operating profit margins for several years before the pandemic devastated the business, from 24% all the way down to almost zero. And now, as it's recovering, as it's rebounding from the devastation, its operating profit margin has climbed back up to 8.33%. But what you'll notice is there's a lot of room to go before it recovers back to its pre-pandemic high of over 24%. Now, it may never get back to that level, but I expect it to approach that level over the next several quarters, over the next several years, to continue rising from where it is today. So while it may not get back to 25% operating profit margin, it'll be somewhere in between 8 and 25, but likely higher than where it is today at 8 because it's just now recovering from the pandemic. It's got a long ways to go to fully recover from the devastations of the pandemic. So you're getting in at a time where the company has demonstrated the recovery is sustainable and it's making progress and it's making steps towards the recovery to full strength. Another reason why I really like this growth stock is because it's trading at the cheapest it's been arguably in the last 2 years, right? Arguably the cheapest that it's been. It's trading at a forward price to earnings of 16.83, and the stock has hardly ever been cheaper than that going back 2 years. Now, you may have had a brief opportunity around January of 2023 to buy it at this valuation, but it quickly jumped higher right after it dipped to that level. So it may be approaching that point again where it's dipping, where it hit its bottom and now it's going to bounce back up again because this stock is not one that trades at this cheaply of a valuation for the very long time. So you're getting this excellent growth stock recovering from the pandemic at a relatively cheap valuation that's capitalizing on the biggest consumer trend right now, which is that of the unleashing of pent-up demand for away from home experiences. So what is this stock? It's time to reveal it. It's the Walt Disney Company. The Walt Disney Company, of course, is benefiting from the away from home trend. People are visiting its theme parks, its hotels, cruise ships, and it's benefiting strongly from that trend. Now it's got some headwinds, to be sure, but that's arguably already priced into the valuation. That's arguably why the stock is trading as cheap as it is. All right, so I think this is an excellent growth stock that you might regret not buying on the dip. Thank you so much for watching. I hope I'll see you again soon. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.